Hey, what's going on, guys? This is Greg with Idea Trading Ideas, and today is June 7th, 2021. And as you can see, we have Limelight Networks up on the screen, and we're going to be doing our trade idea number 12, which is going to show us how to set up a cover call on Limelight, or LLNW, right? So current price is $3.19, up 9 cents for the day, or positive 2.90% for the day. After hours, we're down nothing. We're gonna go through the chart really quick. 1 week chart says that we're up 6 cents, or positive 1.92%. 1 month chart says that we're up 24 cents, or positive 8.14%. 3 month chart has us 14 cents up, or positive 4.59%. 1 year chart has us down $1.86, or negative 36.83%. And the 5 year chart has us up $1.75, or positive 121.53% over 5 years. As we scroll down, we take a look at our average cost of $3.48. We own 201 shares, and our portfolio diversity is 8.14%, right? Current market value is $641.19 for those 201 shares, and our today's return is positive $18.09, or positive 2.90%. Total return is negative $58.81, or negative 8.40%. Now, remember what I always tell you guys about being negative. Just because you're negative doesn't mean you're actually negative. And what I mean by that is anybody that trades option contracts, covered calls, or cash secured puts, to be more specific, you're going to be collecting those premiums every week, every month, so on and so forth. And this is going to generate that income for you to kind of average your cost down. No, it's not going to show up on your Robinhood platform or any other platform that you're on. That's why you need to actually set up your own spreadsheets and keep track of the monies that you're collecting. So what we're going to do is scroll down and take a look at what's going on with me. I have option contracts, 2 contracts in place, current value at negative $26, or negative 6, or negative 30%, right? Total return, negative $6, or negative 30%. And as you can see, here it is right here. Me selling off a $3.50 call for 13 cents. Click on it, you get more details. Scroll down, and as you can see, the average credit per share was 10 cents, right? We're doing 2 contracts, which equals 200 shares. Break even is $3.60, and 2 contracts that I talked about are right there. Credit received was $20 up front. Current value is $26. That's why you see the negative 6, right? Does this matter to us? The answer is no. The reason why is because we already agreed to sell the shares at $3.50. As we go back up here, we know that the current price is $3.19. So we have until like July the 2nd to sell this off at $3.50, which means that if it doesn't go up to $3.50 by July 2nd, we're going to keep our shares, and the $20 that we've already been paid, we're going to keep that regardless, right? So what we're going to do is actually scroll back and go down to our history portion, right? And what we're going to do is click on calculator, and we're going to add up those premiums that we've received, right? So we got $20 right here and $10 right there. So that's 30 that we've received, plus we're going to scroll down, and we got 20, 40, 66. So that's positive 66 equals $96. Scroll down, we haven't received anything else. So right now we've received $96 in premium. We're going to scroll up, go back one, go up a little bit more, and we're going to add or minus out another 58.81. Pull the calculator back up, 58.81, so minus 58.81, and that gives us $37.19. So we're actually up $37.19, not negative 58.81. So if we wanted to sell the shares off right now, we would be ahead by $37.19. Anyway, we're going to close the calculator down, and I'm going to go into how you can go ahead and do this covered call option trade, right? So we're going to click on trade LLNW options, and first thing you want to do is take a look at the $3.50 strike price and go over here to price, right, which is going to be the premium paid out to you. There's nothing set up. So make sure you also have this set to sell call. And remember, this only applies for people that actually own the shares already. So if you own 100 shares, 200 shares, so on and so forth, as long as they are in a batch of 100, you can do these covered call option trades. So basically, they're not offering us anything for June 11 contracts, June 18 contracts. They're not offering us anything. June 25th contracts, they're not offering us anything. And July 2nd, they are offering us 13 cents. So first thing you're gonna wanna do, as you can see, I have -2, which means I have 2 contracts, right? You're gonna go ahead and click on that positive sign. You see it says short call, $3.50 call, -13 cent, total credit is 10 cents. Why is it saying 10 cents? Reason why is because it automatically averages down for the stocks that are like less than $5 or so, right? So it kind of minus them down, and so you're gonna get 10 cents from this deal, or $10. Expected profit and loss is $10, right? So max profit $10, max loss unlimited, and break even is $3.60. The reason why it says unlimited, because they're saying, hey, if it continues to go up in price, they want to say it's gonna go against you. Now, it actually isn't going to go against you because you own the shares, number one. And number two, you've agreed to sell your shares off at $3.50. So as soon as it hits $3.50, these shares are going to sell off. It doesn't matter if they go up to 360, 370, so on and so forth. It doesn't matter. They're going to sell off, at 350. You receive your money right here already. And whatever you bought the shares for, let's say you bought them for $3, the difference between $3 and $3.50 will be 50 cents. If you own 200 shares like me, that will be an extra $100 on top of the monies that you've already received right there. So really don't pay attention to the unlimited loss aspect of this particular trade, right? Because this is going to go in your favor. Now, let's say it doesn't reach the $3.50 mark by the end of the contract, which is July 2nd, right? Which would be a Friday. If it doesn't reach $3.50 by that time frame, what would happen is you still get to keep your monies that you collected, and you also get to keep your shares that you put up. So it doesn't matter if it's 100 shares up to 1,000 shares, so on and so forth. You would keep all of your shares and the money that you put up, right? So if you own 1,000 shares of LLNW right now, basically they would pay you $130 up front, or if you were looking at 10%, which is $10 per 100 shares, you would get your 10% right then for like 3 weeks of work, right? Anyway, hopefully you guys learned something from me setting up this covered call option, or that hopefully you learned how to set up a covered call option with LLNW and actually pick up a couple of dollars in the process. If I can do anything to help you guys, please reach out and let me know. Please like, subscribe, comment to the channel. I really do appreciate it. You guys have a great day. Bye.